Okay, let's start with Tsogo, right? Because this is the biggest one of them all. Tsogo Sun, it owns the Southern Sun hotels and then a number of gaming venues, including Montecasino, which Joseph just mentioned, which is very big because, of course, this is the center of the economy. That's where all the money is. It's also got Gold Reef City and Silver Star in this region. It's got facilities around the region. It's got hotels in coastal areas, Mozambique, Durban, Nigeria, and so on and so forth. Came out of the HCI group through a process of reorganization and restructuring and reinsertion of the Southern Sun assets into the Gold Reef listed entity. Market capitalization 29.3 billion rand, so pretty sizable. Price earnings ratio 14.89, dividend yield of 3.61. It's been around long enough for people to perceive it now in its dominant position. Let's look at the share chart because that'll tee up the 5-year perspective, telling you, it looks like it's done well. Had a bit of a slump in 2015, 2016 been a bit choppy, 2017 has started for the year well. What's your thoughts?
No, certainly. I think if you look at 2015, obviously you've got the dip, but PE ratio about 14. If you talk of the overall market, it's still trading at a discount. Dividend yield of 3.6, which I think is decent, as long as you're above the lower target of the government inflation targeting band. So I believe it's a good stock. We were putting the price at about 35 rand per share. So when we looked at the model at the beginning of the year, you were 18% discount plus the dividend. So your total return could be about 20. So I think it's a solid business.
Okay, so that's how you often look at these things. You look at relative market values, you look at the dividend, you see where it is, and then if it moves in a favorable way, then obviously it's earned its place in your portfolios.
I agree with you.
As far as the actual business is concerned, there's a lot going on here. For starters, Marcel van Oorlog, the CEO, seems to be keen to take the properties, the physical properties, and push them into a listed property entity called Hospitality, which they're controlling, and it looks as though they'll do some sort of managed separation. In addition to that, they bought a couple of assets in Rosebank and Sandton. They've remained very busy, and they've been spending a lot of money on upgrading their facilities. New carpets at Montecasino in the gaming area. Big facelifts on some of their products, properties like the Elangeni, Suncoast, all of these other facilities. They did a big renovation of the one in Mozambique, which you might have stayed at in Maputo.
Yeah, when I went to Maputo,
Yeah, I stayed there too. So they closed things down and they spend, tens or hundreds of millions in some cases on these properties, with a view, obviously, to remaining at the forefront, keeping things moving. The occupancies, however, are sitting at about 62%. That's the number of beds that they sell on an ongoing basis. It would be better if that was a bit higher.
I agree with you. I think you want basically 65 and above. So ideally for hotel, for occupants, you want 75.
What's going on there? Do you think it's government employees not traveling?
No, certainly.
The economy is too weak?
The economy is too weak. Things are obviously subdued. But I think the good thing you talked about is obviously the renovations, because you want to keep a fresh look and you want to say come back again. And I think given the competitive today in terms of buildings, I mean, if you look at just the new buildings in Sandton as well, people want modern look and also this open space and more like green buildings are the theme. So certainly I think when you revamp a hotel, it's kind of welcoming to the guests, and that should be able to
particularly also for foreign tourists, because the minute you do that, it becomes apparent on the internet sites where people give these reviews, and if you get a fresh feel, then obviously it's going to get well regarded and upgraded. What about foreign tourism? Because with the rand being strong, that's potentially not so helpful, because that means that people coming from Europe, coming from the UK, coming from Germany, coming from the US, coming from China, aren't getting quite the same value package that they might have perceived themselves to be getting a year ago.
1 year ago, I think you were looking at the rand trading between 14, 16. I think we had our misfortunes of getting to about 17 during the Nenegate matches. But certainly, I think the rand has surprised a lot of people. Last week, we went to about 13, 24, and all of a sudden now we're back below 13. So it has basically defied the odds, and that would make it more expensive for foreign visitors to come.
So that's not a great plus, but at the same time, we know commodity prices have been a bit volatile. There's political risk always in this market, so it's possible that the rand could be a favorable factor.
I agree with you. The volatility in the commodity market actually is just surprising, and I don't believe that we are out of the woods yet, given obviously the volatility. But
let's put that share chart up again. So here's the question. At the current rate, we've seen them bounce a little bit. They have been higher. and it's pretty solid, and they've got a lot going on, and one would imagine the returns in time could continue to improve. So what are you going to say? Are you hot or not on this one?
I'm hot on it.
Hot. I think I'm going to tip with you on that one and say yes, I'm hot too. Potentially a bit of an uptick in consumer
uptick certainly, yeah.
circumstances, and all of the homework and hard work that's been done there could come to pay.